From FXEmpire, this is Chris taking a look at the gold market. You can see gold got absolutely hammered during the trading session on Friday as traders freaked out about the better than anticipated jobs number. At this point, the bond market is starting to sell off drastically, and therefore rates rise and gold falls. That being said, the 50-day EMA underneath should continue to offer support, and I think that will be the case going forward. Ultimately, this is a market that still sees a lot of support down at the $2,000 level, so this will end up being a buying opportunity eventually, at least as soon as all the panic traders get out of the market. The uptrend remains for multiple reasons, although we may have to reprice the idea of rate cuts. The geopolitical issues alone make gold something you want to own, at least in part of your portfolio. But ultimately, it looks like we're going to chop around between $2,000 and $2,075 in the near term. If we were to break down below the $1,980 level, that would be extraordinarily negative, as it would open up the possibility of completely falling apart. And at that point in time, I would probably consider shorting gold. Until that happens, though, I don't really have any interest in trying to get too cute with it. I'm just going to play the overall market that we have, which at this point in time is range bound with more of an upward proclivity. Furthermore, keep in mind the jobs number coming out hotter than anticipated generally causes a short term reaction that quite often gets reversed. So I will be watching this for signs of strength and taking advantage of that if and when it shows up. If we were to break above the $2,075 level, it's likely that this becomes more or less a buy and hold market. But right now, it looks like everybody is in the process of running their programs and throwing the market around without regard to anything beyond the next 2 or 3 minutes.